Good morning to both of you. We've had sort of a wild week in these earnings reports. What are you expecting to see next week, Nancy?
Probably continued volatility around earnings reports when companies either meet short-term expectations or don't. Within that volatility, there's opportunity for long-term investors.
And Jim, are you still, you've always been a great bull. Are you still bullish? I mean, we're watching the 10-year. It's moving up.
Yeah, Andrew, I still lean that way. We're going to get a correction at some point, and there's corrective forces that are coming. Yields are going up, inflation fears are rising, the tapering is coming. So there's definitely some building and corrective forces. Maybe we'll get one yet this year, maybe early next year. But it'll be difficult to call. And I still think, when I look out into next year, Andrew, that the market's going to probably go up another 8 to 10% from here. In next year, so I wouldn't get too warped up about a correction in the interim. I'd stay focused on what you want to own going into next year. I think economic growth is going to be good, and I'd be focusing away from the S&P 500 towards small caps and cyclicals, and I'd also introduce more and more international stocks into my portfolio.
Nancy, what do you think about that? Are you playing the cyclicals now?
I'm a growth manager, and we are investors in companies. Excuse me?
What do you do? I mean, typically the big tech stocks would be where you put your money then.
We have in the past. At this point, though, we want to tilt towards, we believe a lot of large numbers do hurt you. So where we sold Apple and we replaced it with Tesla 10 years ago, as these companies get larger and larger, we want to look for other opportunities. Netflix, incredible executor. We still own it long term. They have a lot of opportunities, but we're looking for a smaller component to participate in the growth of that area.